accounting practice. So we have another national accounting standard. We have one again on the general accessibility. We have this one as the national accounting standard. All those fall under the GAAP. When we are talking about national accounting standards, we have our own standards here in Malawi, okay, that we base on. Apart from the conceptual framework, we still have that the GAAP has to constitute of, has to be incorporated into it for us to really have the right rules or theories that we should be basing on the conceptual framework. Then we have the last one, which is the local stock exchange. Local stock exchange fund. Okay. So we are saying, if we are talking about the conceptual framework, it is the general accepted principles that are in the conceptual framework, but it is based on country to country, whereby if we are talking of the GAAP, it consists of the national company law, the national accounting standards, as well as the local stock exchange requirements. So it will base on country to country if we are talking about the GAP. Apart from that, we also have other requirements that are non-mandatory sources. For example, international accounting standards. International accounting standards. What are we meaning? We also have other international apart from hizi za kwatu zingine zinapanda rambo mbili kama kaso zina za kunja zapa mwamba hizo za mzigo watu kuma izina za kunja that are recorded in other countries. So these are some of the things that the JAP or the conceptual framework bases on. So it's not that despite it is international, we still have a part that is for the country. If you go and read in the book, we have so many things that we can look into when we're talking about the conceptual framework. But because I just have to let you understand about what is the conceptual framework and its content. We have the framework which provides the development of the international financial reporting standards and the international accounting standards that is there. So we have that the GAAP when we are complying with the conceptual framework, but then we have the international accounting standard board framework. When we're talking about framework, we have one. Easy. Zimakhala zoti zimene malamulo amene amayika kuti akhale mu conceptual framework amene amakhuza kunja ndi mkati m'dziko lino. Okay, so we have the second one, which is the International Accounting Standard Board framework. So this one is the second one that makes the conceptual framework. The international accounting standard board organization board. It makes a framework. Conceptual framework. Okay, where we base on our financial reporting. So I'm telling you what constitutes in the conceptual framework. One, the GAAP, which consists of the Malawi or that particular country regulations, the national accounting standards, as well as the national law or local exchange requirements. And then we have other international accounting standards as well as statutory requirements in other countries. So it's a mixture of so many things. Then we have to look into the International Accounting Standard Board. This is a board that looks into the standards that every country bases on in the world. So the framework provides the conceptual framework for the development of international financial reporting standards. Amena mapanga malamulo hatu asazi pia tugamile. These ones develop the IFRS and INS, meaning International Financial Reporting Standards and International Accounting accounting standards. So these are this is the board that makes framework. The framework is also considered in the conceptual framework of the financial reporting. So the framework consists of several sections or chapters. There are so many of these I will not say, maybe I can just in passing by tell you what they are. We have the objective of financial statements. The objectives of financial statements we know. What are financial statements? Or what examples are give up to make a financial statement? Can you give an example? Financial statement? Profit and loss. Income sheet. Income statement. Good. So those are the financial statements. Then you have elements of financial statements, recognition of elements of financial statements, measurement of elements of financial statements, concepts of capital and capital maintenance. So these are just in passing by that affect the framework that is for the board. So those are some of the things that we just have to understand why we should have a framework and how it is done. The rules that we use are those. So if we can just sum up together, we can say now the framework deals with the main objectives of the financial statement, the qualitative characteristics of the financial statement, as well as the definition, recognition, and the measurement of the concept. So this is just for you to understand about the conceptual framework. Any questions on the conceptual framework? Okay, maybe I should ask you a question. Who are the users of the financial statement that us as financial reporters are going to report to about the reporting that we're going to do? Users or who will receive the report that we are going to do? You are a financial reporter. And when reporting, you use conceptual framework standards, which are based about whatever I've said. Now, after you have done the financial statement, and then you are reporting, who are the ones that we are going to give to the report? Tipeleka kwanjani maripoti yathu. Tipate kumazitengera mu class. Nzokwenza zimene zimapanga kunjani.
It's a businessman.
Okay. Okay. He's a businessman. Your brother, your sister, whoever is on job is working.
My brother is at Gombana District Council.
Good. Even yourself, let me give you an example of yourself. Unakwenda kuna body umakhakongo kabena makhakongo kwa hostel school. Good. Am I there that ndamina makutumizira na?
What?
Am I there that ndamina makutumizira na?
Yeah.
Good. Ndawe tunashuwa lembera wina uti ndama zata. Wow. That is reporting. Okay? You are reporting to who? To the father or to the mother. Okay? So mkwapa company angashite report kuti. Ndimbenenda bisia chito ndalama change because why I'm asking that question? It's the same as what you are doing here. That's why unless we don't think that it's the same thing that we interact every day. Because when you are reporting about money, it's the report that you are supposed to do in the organization. You get the point? Good. So I'm saying you are reporting to the father. The father is the one that gave you the money. So you are at an organization. You have been given money. You have done this financial statement, and now you are reporting. To who are you going to report?
Organization manager.
Yes, the manager. You are reporting to the manager because you have to know many more than manager. Good. Manager. And not only that, maybe for example, this organization is for Bambino Corporation. Okay? So when we are reporting, we're supposed to report to the owners of the organization. Apart from that, we have bosses that we are supposed to report who are managers. But even shareholders have to know about what we're doing. Even shareholders. Others that want information. So many. You get the point? Good. The other one, in common we mistake for this. There are so many that we can report to. And all those that want the information. Even sometimes our competitors, they will want to know our report. Why? We are in the same. Is it the imagine kind of knowledge? Nobody by investing. And focus on them. And that one about the mind. And this is an effect in international. Kayacha Catholic University. And that one about the mind. After the financial standard. Sometimes even competitors want to know the report that you have done. Why? How do you do? Which way do you follow? Because as we have already said earlier on to say, it's not every, let's say, organization which can use the same type of ratio. It's not. There are several ratios. You can use, let's say, the turnover. Other people are going to use this other one, and so on. So those are some of the things that even competitors can want us, our report also. Even customers, is it?
Yeah.
Hey, customer, for example, yourself. How did you come to know for the university? How did you know? Where you know? Yes, friends.
Social media.
Yes, social media. So some of the people that they want to know about that is customers. My customer. Maybe for example, kuna manage never graduation last week. Let's go and see. Let's see our report. So they are to unbelieve who would like to see our report. Even like the banks. Is it? Banks. If we go to the bank and say we want to go we want to see their services. Okay? Banks. Banks. They cannot give us a loan without seeing our financial stat or our report. Then they are going to know how we are going to have that. Even our fellow employees, they will want to know. Because they also want to see, are these people doing the same thing? Suppliers to us. Although there are so many that we can talk about if we want to talk about the people that want the reports that we are doing. So, as we have already stated, of the financial framework, or the framework itself, which states that the objective of financial statement is to provide information about financial position, financial performance, and also changes in the financial position of an entity that is used to a wide range of users in making economic decisions. So, what are we talking about? If we are talking about financial reporting, we have to know the objectives of us reporting. Why are we reporting? We are reporting because we want to, the company or shareholders or whoever wants to know either the financial position that we are going to show in our report, or else we want to show the performance of how we are performing in the organization, or also changes in financial position. So these are some of the things that us as reporters, we should not exclude them in our mind, that people want to see whether we are doing well or we are not. So mind you, as a financial reporter, it means people are expecting things to change for the best because you are there. Okay? Yeah. So our subject is very, very important because we are the ones that can change the financial position of the organization or even performance for the organization. So this is very, very important. When we're talking about financial position, information is affected by following the information about each of what is the user doing. For example, economic resource controlled. Are we controlling the funds that we are using? Financial structure. Where we predict borrowing needs. How are we standing? If we are not standing well, or if we are not doing the right thing, we don't have enough things or assets that can assist us. It means we are supposed to borrow somewhere for us to have financial structure. And then liquidity and sovereignty, or solvency, or solvency. What is liquidity? What is liquidity? Liquidity. Una problem.
Representative just for good.
Whether you have money in the organization, sufficient funds that you have, that's liquidity. Solvency available of cash over the long term to meet financial commitment. What are we talking? Good. So these are some of the things that we just have to know as the reporters. Again, we also have some key ways that we are going to be using now and then. For example, accruals. What are accruals? Accruals versus the effect of transactions and other events are recognized when they occur, and not as the cash or its equivalent or received or paid, and they are recorded in the accounting records and reported in the financial statement of the period of which they are related. What are we saying? Sisi chote kile tunagua cash. Sisi magua kwa tena chini financial statement. That is what we are saying. Okay. And then we have the going concern. What is going concern? So this is the main output. Like I said here, this is what you have to know. Going concern. Going concern is the entity viewed as continuing. That's going concern. Okay? In Mwafrika Mshita report that company. But Mshita report that company Komandana Simukupanga. Always when we are reporting, we always do 2 years. For example, you cannot report only 2022 without 2023. Okay? Because always you compare, okay, how much assets do you have in 2022? We had about 530 million. Okay? The total assets that we have. How about in 2023? Okay, we will say 700 million. Okay, it means there you can compare. What is the difference? The difference is about 170 million. There you can compare. You can say, yes, we have really grown. Sometimes you can have, let's say, let me give the same asset, let's say 300 million, and then you come to 150 million. Then you know that you are going down, is it? Then you say 150 million with that difference. It means you are sloping down. As a result, you are seeing the organization that is not continuing. Yeah? That is not going concern. But going concern is rather that you really see the increase that the graph will grow like that. That's going concern. So, mostly these are some of the things that we talk about when we are talking about reporting, and we have to know them because one way or other we are going to use them in our everyday reporting. Again, we should look into the characteristics of the financial statement. The four principal qualitative characteristics of financial statements. One, understandability. It has to be understood. When you are preparing a financial statement, people should understand that he's talking about that. So the first one is understandability. The second one is relevance. 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 And then the third one is liability. Reliability. And then the last one, which is the fourth one, is comparability. Comparability. So when we're talking about understandability, we're talking that the users must be able to understand the financial statement. They are assumed to have some business, economic, and accounting knowledge and to be able to apply themselves to study the information properly. Complex matters should not be left out of financial statements simply due to its difficulty. It is relevant information. So, as we are saying that, always it has to be understood. Osaleba kuzungumza kuti kodi ndinakauza saziwo kuti ndrama zinandani. No. But let it be straightforward and understood that yes, people should understand that yes, we were from here and now we are here. We are from here and now we are here. Usapinda mafiga haya. Akaunta mbili sata kufika mpaka karikani because anakonda doshini. So the other thing is relevance. Relevance information has the quality of relevance when it influences the economic decisions of users by helping them evaluate past, present, and future events, or confirming or correcting their past evaluation. What are we saying? They are relevant. Why? They should be seen properly. That even managers should know how to decide yes. According to what the example gave, to say yes. I think 2022 we had 30 million assets, and now we have 700 assets. It means we are growing. Whereby the decision can be made, let's continue with this strategy. But when we are talking of the second example, whereby I gave him to say 300 million against 250 million, it means we're going down there. The managers are going to say, or users are going to say, no, something wrong. We have to change our strategy so that we should start picking up. Okay, good. So that's relevance of information. And then liability. Liability information has the quality of reliability when it is free from material error and is biased and can be depended upon by users to represent faithfully that which is either purport to represent or could reasonably be expected to represent. What I will say, it has that form of material error. Material error meaning it doesn't have the material error whereby you say, if we talk of material or materiality, we talk of something that can be recognized and that can give an effect in our financial statement. What do we say? Materiality or material. For example, it will be based on each and every organization. Let's say, University of Europe can say, when somebody has lost 50,000 Malawi coins, that one should not be taken into account that he should give back the money. Okay? That one is immaterial. But if it is 51 million, that one, take action. You can also identify it means it's in taking number. Okay? This is University of Freedom. But let's say J1, you say effect 20,000 euros. You can repeat it above, it means 21, it means take action as this one. Okay? So it means this one is immaterial to J1, while this one is immaterial to Univision. Okay? This one is material. This one is material. So what they're saying there is no material error. That is not good. Okay. That's why they are talking about liability. So anything that is material should not have an error in the financial statement. That means it's reliable. Comparability. Always when we are talking of accounting, we talk of comparability. Is it? Yes, we talk of comparability. So that cannot be skipped. For example, as I'm talking about the reporting, it means we're supposed to report 2 comparison years. Yeah. Always we cannot report in 1 year. We're supposed to be reporting according to the year. So as the financial reporters, we should be faithful, and not only that, we should follow the principles or the framework according to what we have already talked about. Then we have again neutrality. Information must be free from biasness. We have to be neutral. Also to be we don't do that. In accounting, we're supposed to follow the principles that we are supposed to follow. Prudence. What is prudence? Prudence. Do you know anything about prudence? The concepts are very more in accounting. Uncertainty exists in the preparation of financial information, e.g., collectability of doubtful receivables. These uncertainties are recognized through disclosure and through the application of prudence. So if we're talking of prudence, we are talking about the information which does not, or however, allow the creation of hidden reserves or excessive provision or even understatement of assets or income on the expenses. So this is when we are talking about the completeness. Financial statements must be complete within the reactions of materiality and cost. To be reliable, omission may cause information to be misleading. What are we talking? If we have started the information, we should complete it according to what is supposed to be done. No loss of material, as I told you, compared to cost. For example, if this is the value is 10,000, the cost should be 10,000. Not that the value of the material is 10,000. You write 750. You get it?
Yes.
Clear. So that is that. Then, if I talked about comparability, which I said users must be able to compare and edit the financial statement as we are doing 2022 and 2023. Peter Okatungi chosainira umaziwa sitima saini katima paper kwa Frank pale pa section.
Usainira
Sitima sainira kwa paper yake. Peter Okatungi signing sheet na tamani za signing sheet ndio unanitawi. wewe kulenga jina lako hapa, usaini na kamili za bajeti. So we just finish up with the elements of the financial statement that we can think about. So we're saying elements of financial statement according to that, which means if we're talking about measurement of financial position, it's in the balance sheet, whereby we look into the assets, liabilities, and equity. Then if we want to talk about the measurement of financial performance, it means we're going to look into the income statement, where we're going to find out about income and expenses. Why are we saying that? We are doing that because when we are reporting, that is very important. So that is very important because if we are talking about so that's where again even the framework lays upon that to say we are supposed to look into the let's say financial position where we're going to have the assets, liabilities, what are liabilities? What are liabilities?
Liabilities. They're like loans.
Yes, loan. Good. Loan. Loans are found in the balance sheet, isn't it?
Yeah.
Therefore, they are what? Assets. Yes. Ni ngongole, na kaya ni ngongole. Kama kwa mzazi kuu, tina zile maana. Kama tina ngongole zati mmoja, tutu mmoja, tena kumbu in the near future. Tina bila kucha. Make sense. Yes. So those are some of the things that we as the financial reporters have to know. ulindimke ulindichan the flash phone uje nuna yuna ya baba hiyo dipase uje kosa na hiyo ngozi ufunga kuyambira serious pano kweli. Thank you. So since I've given you two, the course outline and the book. Okay, the course outline is that one. Outline. Section of so next time we continue on the financial analysis and the other things. So you will look into it and then be reading. Yes. Hey, because of things that are beginning and going up, we don't it's not about the first short. Okay?
Thank you.
So if you happen to I don't know whether we are many who would have just opened the forum whereby, unless you know the phone there or what? Phone number.
Just one we have to see us.
Yeah, yeah, oh, please on nine. Okay. Then have 911 password 0 99 36 120 7. Hata mnadika.
Mengo sana.
Ndio wala sio ngoma.
Ngoja
nitapata.
Sina ndio mzuzu tunaongea na kwa
sibaya.
Ndio ndio pasho kwa show.
Chitonga you can talk free.
Chitonga ili kuongwa.
Kuongwa. Great.
So ya tubuka?
Yes, I'm tubuka. I speak to Kitumbuka.